Hi, I'm Brian Willett from Cashflow Financial. And as everyone knows now, the budget brought in a lot of changes which will impact how we use family trusts. And as yet, that legislation has not been passed. So we're going on what has been spoken about rather than any specific legislation, nor has the rollover provisions been announced completely. So we'll wait and see how that works. However, most people are currently structured with a trading company and a family trust holding those shares in the trading company so they can pay dividends down. If they're earning more than what they are going to need to live off and they want to invest, they use an investment company. Quite a typical structure. Under the changes now, if you were to do that, you would pay family trust tax at 30%, plus you would pay investment company tax without a credit. So there is a need to change. So what most people are proposing is a holding company will take place of the family trust. Makes sense. There's a few provisos and how we move each lot to be discussed on an individual basis. So the benefits of a trust in a business structure, one was asset protection. No one actually owns the business. It's owned by the family group. So if one particular member was going through a marriage separation, or in case of creditors chasing a particular person, the trust assets are not your assets. If you use a company instead, well then, yes, they will be your assets because you'll actually hold shares. So for asset protection purposes, we may choose to still use trusts. Tax flexibility, yes. Flexible distributions, 0.5. Both we can replicate to a minor degree, but not to the same degree. Succession planning, that's another big factor. If somebody owns perhaps a farm and the farm is being owned in the family through trusts, then one generation to the next can take over. And it's quite a simple matter of just changing the deed as to who the appointor is. So now we may still choose to use that. If we do, we obviously have to limit the amount of tax that the trust is going to pay because of the rates and the lack of credits being passed on. So when we set up a holding company in the future, we're going to have to look at the three different classes of shares. Equity shares, who owns the particular company. Husband and wife, maybe the principal residence is owned by one spouse, whilst the actual shares in the company are held by the other. Or directorships could be opposite to equity shares. So a little bit to be worked out there. Voting shares, this is just basically who was the trustee in the past, who can make the decisions, who can appoint directors, etc. And dividend shares. So those dividend shares are pretty much the beneficiary entitlements that were distributed in the past, which now will be declared by way of dividend. So we can replicate most things that a trust currently does, but not all. And with dividend shares and the small business concessions, we have to be very specific how we use them. So it's a time for a lot of contemplation. However, 1 July 27 is the start of the rollover provisions, 1 July 28 when it kicks in. So we've got plenty of time to think about how we're going to structure it and get it right.